coming in, we really kind of got crushed in UVXY over the last few days. Let's take a look here at the chart. And you can see just kind of like straight down in the last month for UVXY. Let's close in a little bit, and we could just see, yep, that moves straight down here in UVXY. If we do pull up a term structure, remember, a VIX term structure is going to show us what the futures are doing month by month. Now, UVXY and other VIX ETPs are based on an average of these two futures, the first 2-month futures here to my left. You can see July and August futures. Those are the two pertinent months. And if we were to go to the ProShares website, ProShares, of course, being the holding company for UVXY, we could pull up the daily holdings, and you will see that expiration for the front month is on the 17th, which is in 2 days. So if we look on the ProShares website, and I get out of the way here, let me come down here so you can just see my head. All right, so if you look over to the right here, it shows shares/contracts. Now, there's 3 lines here. There's SIBO VIX Future 821, SIBO VIX Future 717, and then iPath Series S&P VIX Short-Term Future Swap, GS, which stands for Goldman Sachs. So sometimes this ETP uses swaps, but the ratio between the two futures used here remains the same, and you can just consider this swap to be a way of having this ratio of futures but saving a little bit of money for the fund. So if we look at the swap here, if we look at the futures ratio here, we've got 4,600 of the front month and 39,000 of the back month. So heavily weighted to the back month here, and that will continue as we move into expiration. In fact, within 2 days, there will be nothing of the front month futures here. So if we go back to our VIX term structure here, we can see, and I know it looks kind of funny having me out of the picture. Let me put myself small here. We can see the 2 months, July and August, and we see that July is very close to spot, as is always the case right before expiration, only 10 cents away from spot. Sometimes it's actually farther than that, but they will converge at expiration. That's just the way things work. And if we can imagine that July future, there are 4,000 of them, and this August future, there's over 30,000. So most of UVXY is based on this future here that's 1522. So if volatility stays below 13 here, this future will move lower towards 13 over time. This July future doesn't have any lower to go, right? So if we kind of just stay here, this July future isn't going to really pull one way or the other. But the July future is almost moot at this point because it's no longer really included in the calculation very much. So it's all about this August future now, and the August future, things kind of remaining the way they are, will slowly be pulled down. Now, we can notice 16% contango here between the July and August future, and that is significant. Even though there isn't much July future left, there still is a rebalancing every day where this future is sold and the August one is bought. And so this 16% is significant because this does represent the way that this is being degraded. This July future doesn't have any more to fall towards spot. So great to replace it with a future that has so much more to fall towards spot. If you're a short vol person, you love that because now you've created this distance for this extra distance to fall towards spot, and that represents potential to make more money to the downside if you are a short vol person. So this percent contango, although you can say, well, it's almost expiration and it doesn't really matter. Well, no, it matters just as much as ever because there still is the same amount being rolled every day when this is rebalanced. So yes, there's only a little bit left to roll, but the same every day is being rolled. it's just as significant now as it is in the middle of the month or the first day of expiration. Whatever contango is what's affecting this rebalancing, and thus we have big pressure to the downside right now. And you can see if you look over here to the second month, you can see that the contango between August and September is 5% right now, but count on that surely to build as the front months come on. Remember, as the front months come on, every day they have to rebalance, and they're going to be selling some August and buying Sep, and that is going to force these two apart from each other. So, people look ahead and say, well, in 2 days, contango will be 5%. And yes, for trading wise, you could look ahead. However, the actual rebalancing is still based on this 16% number. So we do have big decay for the downside here, folks. And I know, the question is, well, do you stay short UVXY? And a lot of people, get kind of skittish because volatility down here around 13 on the VIX. How much lower can it go? And, if you watch my buddy Mark Sebastian and Andrew G., they'll, in Mark Sebastian's book, he talks about how the VIX can get in this sort of range 1 where basically sort of nothing's going on really, and it can stay in that phase for like most of the time. And thus, if the VIX just hangs out around 13 here for a while, these ETPs are just going to continue to go lower. And so to try to kind of pick a bottom on these is tricky. Yes, it's a better place to buy these things when, the VIX is 13 than when it's 18 or 20. However, this could easily the VIX could take a slow train from 1298 to 12 over the next month. And being long this volatility, it's just going to be a rotting. So the question is, well, does it continue down lower? It's a hard call. Like trading is always a hard call. That's why that's the nature of the beast, basically. You would feel pretty silly if you look at the UVXY chart right now, and if you initiated a short right here in the chart, you would feel pretty silly if it just bounced off of here and went right back up, because it would be like, wow, you sold it at the bottom completely. However, the likelihood is that we just continue to keep rolling lower for a while. Now, what can change that? Well, earnings are coming out soon, and we could have some, earning surprises that make this stuff pop completely. And so it really just kind of depends. You've got edge to the downside, in my opinion, just because of contango is so large right now. However, it could have a pop at any time, like I said. I just want you in your mind, if you're trading volatility, to realize that when you see people on StockTwits or something, they seem to have such certainty, like this is definitely going to happen, that is definitely going to happen. I just want you to realize that there is not all certainty. That's what makes a market, and that's why these things are tough to trade. So, yes, you can pick a position and you can talk about it with certainty and you can believe in it, but the reality is we don't know what is going to happen moving forward. We can describe contango, we can describe where we are in the charts, we can talk about fundamentals of the market, such as where we are in earnings cycle, where we are with interest rates, et cetera, but in the end, we can't predict the future. All right, so let's go on to BYND. I want to give you an update on my BYND position here, and because I haven't been on in a couple days, and currently I am short some strangles in BYND. BYND, remember, Beyond Meat, and I did do a little bit more research on this stock. The guy who started Beyond Meat is an interesting guy, Ethan Brown. He was in renewable energy, and then he got into into this meatless burger thing, and he's all over the news. I did learn one good interesting fact from all this. Greenhouse gases, 9% of greenhouse gas emissions comes from agriculture, and 3% comes from methane from cows digesting. Thus, basically cow farting creates 3% of the greenhouse gases in the environment. So we want to try to avoid that. I was driving from San Francisco to Los Angeles one time and came across, cow farmers as far as the eye could see, and it doesn't smell so good. But I was watching a YouTube video where they were describing what is in Beyond Burgers, and it's like peas, stuff from protein from peas, and they use beet juice as blood. They were talking about how it takes hundreds of gallons of water to produce each pound of meat. And we know that it's inefficient growing cows to create meat. And people also have problems with, killing animals and this sort of thing. And thus, I think it's sort of a noble pursuit beyond meat. However, stock trading is not about believing in what a company is doing. It's about valuation. And to me, Beyond Meat is sort of overvalued. The valuation right now is somewhere around $10 billion. And, it might catch up to its valuation at some point, but it needs to be very successful to do that, this company. And thus, my position is I am short strangles, which basically means that I don't want it to go up too much and I don't want it to go down too much. The two kind of stock options are calls and puts. Calls allow you the right but not the obligation to buy the stock at a certain price. Thus, if I own one of the 200 calls in BYND, then I can pay $200 for the stock whenever I want to for 100 shares for each call I own. Thus, if I sell the 200 calls, then I will be profitable as long as the stock is below $200 on expiration. If I sell the 100 puts, then I will make maximum profit as long as stock is above 100 on expiration. And thus, if I sell the 100 put and the 200 call, then I'm looking for the stock to just stay between 100 and 200. And so right now I am short the September 125 225 strangle. So I need stock between 125 and 225. September. November, I am short the 115 put and the 200 call. In January, I am short the 120 put and the 240 call. So essentially, I'm just looking for the stock to stay somewhere around between, let's say, 180 and 140 over time. I have the position on relatively small. It's just 1 unit in each month short. And the fact that I am naked short 3 calls total means that I have to put up some capital for that, of course. Right now, it's showing my buying power effect from this is short $14,000. Short $14,000. I'm taking $14,000 in buying power. If we look on this trade, if I go to my position in Thinkorswim and I pull up under BP effect here, I can see this little graphic here. Now what this shows me where it says PNR, this is point of no return. So this means that if the stock were to gap up 50%, my account would go to 0. And if it were to gap down 59%, my account would go to 0. Now this is unlikely to happen, but it's important that we look at these metrics to know where our risk is. as a trader, we're always concerned about what the most we can lose is. That is our primary concern. If you're spending too much time looking at how much you can make, you're doing the wrong thing. You want to be looking at where your risk lies, what you can lose. And if you can manage that, then the profitability will come. But focusing on, well, I can make this much. I mean, of course you want to see what you're risking to make what, this sort of thing. But the key is to focus on your risk. And so here you can see a 50% move would hurt my account. And if we go to the Analyze tab, we can see what a 50% move would represent by, if I click here, you can look to the left of me. If I click and move this to a 50% move, I mean, obviously you could do the math in your head for a 50% move, but that would mean if this gapped to 255, I would be in big trouble. Or if it went down to, let's see, like I said, it's easy enough to do the math in your head here, but down 50% would be 85. If it gapped to 85 to the downside or 255 to the upside, I would be in trouble. So there you go. That's the position I have on right now. And I'm just kind of hanging out. It's been working for a bit. If it does start creeping one way or the other too much, then I'm forced to do things like roll the calls up. So, for example, right now I am short the November 200 call in BYND. If it starts to slowly move higher, what I could do is I could do something like buy that November 200 call back and sell a higher strike, like maybe the 240 strike. That way, it gives me $40 more to work with to the upside. So rolling stuff around like that can help you kind of recenter your position if you're short strangles. And you want to monitor what you have when you're trading to the short side like this. Let's take a look here for a second. And I would recommend, when you're trading stuff to the short side, that you do monitor your positions carefully, because you don't want to let stuff get away from you, certainly. Oh, okay. So let's see. I'm just looking at the comments. Use coconut fast to stimulate marbling. Yes. Okay. Your ACB is making a little move off some news. Yeah. So ACB. Let me update you on ACB. So I had bailed out of my position a couple weeks ago on ACB, but I did buy some on Friday, as well as MNK. I bought some today. MNK I paid. MNK Mallinckrodt, once again, is the company which makes Percocet, the M30 Percocets, and they've just had all kinds of problems, public relations nightmare, and lawsuits all over the place, and the stock has just gotten hammered and hammered and hammered over time. And so I'm just kind of bottom feeding here. I bought a little, paid 9, and then it went down to like 8.70 or something. I bailed out. Now I bought a little, paid 8.25. Like I said, I'm just kind of bottom feeding here. Pay 8.25. If it pops to 9.25, I'd probably I don't know what I'd do, but a bottom feeding trade. I was looking at M&K to do some sort of options thing, but the options markets are super wide. It's like ridiculous. Look at this stuff here. If we look at like August, August, the at the money's the 8 calls. Those aren't terrible, but look at these 8.5 calls, 60-cent bid at 175. The 9 calls, 35-cent bid at 185. The 10 calls, 10-cent bid at 210. I'm 10-cent bid at 210. That's a great market. Thanks a lot, Yeah, dude, I'll pay 10 cents for some too. Thanks. And if you look, no trades today. 0 trades in this August weeklies. we look at the August expiration here, a handful of contracts trade. This, volatility is up around 100 in some of this stuff, which 100 is still dollar cheap for this stuff, but the markets are just so wide that it's ridiculous to try to trade, I think, the options. This 16 August stuff looks a little bit better, like 10 cents wide on some of this stuff, but I just, I was looking to maybe buy some long-term calls, maybe like the October 9s, maybe pay like 130 for some, looking for a pop. That doesn't seem super bad. You could maybe buy like the Oct 10 12 call vertical, or Oct 9 12 call vertical. I'd almost like, if I'm going to buy some October calls, I'd almost rather not buy a vertical. I'd almost rather just buy straight call and then look to hedge it later, because capping my upside, buying like October 9s in this, you're looking for it to like pop back up to like 12 or something, and to save 30 cents by selling some 13 calls against it or something, I'd rather just be naked long the calls. That way it gives you unlimited upside if this thing actually does pop. But yeah, I like that. So let's go to ACB. ACB, little pop. Look, this is in a downtrend here, and it's going to take something to get out of it. Now, yeah, I've been a little bit aggressive at buying some of this. I paid, I think, $6.90 and $6.85, something like that. It got all the way down to $6.69 or something. But yeah, I think I paid $6.90, and then it went immediately against me down to $6.80 something on Friday. It's popped a little bit, but we're still in a downtrend until we're not. And we've been in a downtrend since this $10 area here. And we're just going to have to wait and see what happens. My feeling with buying this is just that I feel like I don't have that much to lose. I think this company, if you look at the chart, there's no real support or anything till down here around like 5. But I just feel like the stock's already moved down a lot, and it does have the potential as a takeover candidate, or good news can pop it. So anyways, yeah, I am long ACB, and it has had a little bit of a pop recently. If we look at the options here, for example, also better, cheap. All right. All right. So thanks for watching today, and I will see you next time.